Right, my name's Christian Kumar, and thank you very much for the introduction. I'll assume it was me on the... Oh, I need a clicker. You'd think I'd be prepared, but no. Right, just a little survey. So if you okay, a part-time comedian. Right, we're going to be talking about finance. Go ahead, Dennis. Introduce yourself. Yeah. Well, he has that effect on people. Right. Once more, good morning, everyone. Just a little survey. Any VCs in the room? Zero. Oh, that's just terrible. Any founders in the room? A few. So who else is here? We don't know. Right. I am going to give you a little history lesson on finance, on venture capital and investments. Then we're going to talk a little bit about how it affects companies in Europe and how we can take advantage of a changing landscape of capital. I'm on a panel at 12, so you'll have to come back for that, and I'm doing a workshop at 4. After that, I'll be in the cigar lounge with a whiskey. I am here all day to answer questions. But I'm as old as a dinosaur, right? So a little bit about me. I'm a traveling bow tie wearer. But by education, I'm a mathematician. So as a mathematician, it qualified me to do absolutely nothing in my life. I was going to be a maths teacher until Merrill Lynch said, hey, come on over here. You know a few things about equations. Why don't you come along and help us write a derivative? That was my one superpower in 1989, was to write one derivative, which then was used in West Texas Intermediate for the next 40 years. I stayed with Merrill Lynch for 15 years in the US, and I learned a lot. The one thing I learned was how to talk. What they teach you in the 80s is how to negotiate, how to sell. You had to work in every single department of the bank before they qualified you. Sorry, this is going to get old. I'll stop doing that in a minute. But in 2000, I got to come to Europe, right? I got to come to Stockholm in November. Has anybody been to Stockholm in November? Oh, it's depressing. So then very quickly by December, I said, could I move to the London office because it was going to be less gloomy? Exactly, that's on my same point. So I've been in London now 25 years after being born and raised in England, spending 20 years in the US, and I'm a retired investment banker. In 2000, I decided I was going to do my own startup. Now, this is before the credit crisis. This is before people got a conscience, and it was much easier to go talk to a bank and borrow 115 million pounds. So I built a company using a maths formula, and this is what we'll be talking about in this afternoon session on how to scale. But needless to say, I started in 2000. By 2007, we were 4.5 billion pounds in size, 800 people. It wasn't that I was clever. It was because I followed a plan. Since then, I've retired 3 times. I've made more investments. I started investing in Central Europe, in your neighboring country, Czech Republic, in 2011. And today, 70% of my portfolio starts from the Baltics to the Balkans. You might ask me later on, why is that? And it's because of the passion and the dedication of the founder. What do these founders in Central Europe lack? Confidence. What do I have too much of? Wait. But today, I run a venture builder in the UK with the National Health Service. We have one in Italy, one in Greece, and in January, we'll have one in Poland for Central Europe. What does a venture builder do? It protects the founder. So it protects the founder from what are known as investors, the vulture capitalists. And let's get on to the history of venture capital. This is American Research and Development Corporation, 1958. Arguably, if you go on Wikipedia, they will tell you that was the first VC deal. $70,000 was invested in a $2 million loan to Digital Equipment Corporation. Why is that significant? Because they took 70% of the shares, right? It wasn't significant because it was $70,000, but today, woo, I just got louder. Today, that would have been a $750,000 seed round. right? This is when they were building hardware. Later on, that company listed. I tried to find the data on the multiple returns, but it was astronomical. It started the groups of small investors investing in computer sciences in the 60s and the 70s. Why was it in Silicon Valley? First, because Digital Equipment Corporation were there. They were a part of the technology academic infrastructure of Northern California. Before you knew it, East Coast, West Coast, academic centers is where VCs followed research and development. That was the birth of what we call the modern day VC. By the 70s and 80s, the US government realized that post-war, they had to really fuel growth. So they had to make it easier for investors to invest in companies. So they created things like the Small Business Investment Act, which allowed essentially groups of people to get together and invest in VCs or invest directly in companies. Somewhere along the way, we have lost that motivation for fueling future companies. In the 80s and 90s, they reduced capital gains tax because they saw a decline in the way investors were investing in VCs, investment managers, and ultimately the growth of the US technology markets. They also allowed pensions. So you had money from a factory, it went into a pension. The pension then grew in very conservative investments and allowed you, the pension holder, to make investments into VCs. And this fueled the meteoric rise of the venture capitalist. I'm already down to 5 minutes, so that music might play. I'm not coming off the stage. Just so you know, 1990s today, very quickly, was the birth of quoted shares for small companies. NASDAQ, the National Association of Securities Dealers Quotation System, started in the late 80s, early 90s. That meant that companies could float, IPO, gave them access to more capital at reduced valuations because the markets were driven on price to earnings ratio. Why is all of this important for you founders? Because if you don't understand finance, somebody like me will come in and take advantage. Right? My job today is to train you how to defend yourself against investors, how to build dynamic companies at a high growth rate. So the globalization of capital really took into effect after 2000. And it's not because we were making more money, it was because we were able to disseminate more information. The birth of the internet, calling rooms, people were able to sell deals. Yields in Boston was equally as good as in Bratislava. That was the other way around. Yields in Bratislava were equally as good as yields in Boston. It leveled off the playing field. And it also created sovereign wealth funds. It created large-scale family offices. Now, these family offices sat themselves in Switzerland, London, Hong Kong, Macau, tax-efficient jurisdictions. And what was it doing? It was allowing people to have not 3 times return, 4 times return, 20, 30, 40 times returns when they were backing a company that could then list on a financial market. So if you very quickly get on from the 2000s to the 2010s, there were lots of structural changes. There were the rise of mega wealth funds, BlackRock, Sequoia. There were large-scale family offices born out of the oil and gas, the Middle East, countries with natural resources. And everybody was after that billion-dollar return, the unicorn. Now, a unicorn is a mythical character, right? It does not exist. So we've got to come up for a new name for a billion-dollar traction. Billion-dollar tractions now have become very difficult. Why? The same reason where the financial markets grew, the information about your company grows as fast, allowing other countries to compete. The landscape of competition is now your enemy, not the lack of capital. I was at a conference last week in Bologna where we had 9 ecosystems of Europe saying that there's no scale-up programs in Europe. Well, perhaps if Europe built better scale-ups, we'd have more programs. This is not derogatory. This is the way the market is. And later on, we'll talk about how that happens. And then there was a mass crossover. People didn't trust people to manage money. Family offices managed their own. You had new investment managers that would look after large-scale funds and deploy them in higher-risk companies. I'm running out of time. So let's just get past this. Where's the focus today? Don't think it's artificial intelligence, right? That's just another version of the .com. Unless you have a commercial application, a need in the marketplace where your artificial intelligence is going to grow a dynamic business, you've already missed the boat, right? This was the same as blockchain, NFTs, tokenization, cryptocurrencies. You had to meet a need. There has to be a demand for your technology. Health tech. Whilst funding drops slightly from its peak, AI in health tech now is creating another rise in investments back in health tech where you're solving a health tech problem. What are some of the health tech problems? Digitalization, remote care, rehab. Places where a patient now can avoid clogging up the systems in a hospital, a clinic, a pharmacy. We have to move towards preventative care rather than reactive care. Energy and climate. What has the war in Ukraine taught us? That energy can spike. Gosh. I'm just going to keep talking until somebody pulls me off the stage, and I weigh about 96 kilos. That might be a task. Fintech and SaaS are always a mainstay of investments, and that's where a lot of the founders now are focusing not just on SaaS, software as a service, but other services as a service, medtech as a service, rehabilitation as a service, AI as a service, right? So what I encourage you to do when looking at a business model is look at what problem you solve. Is it demand-led? Be able to develop a unit economic model to allow a VC to predict its return on capital. Also, money is still moving. Africa, Latin America, right? So don't think that your neighbors in Germany, France, Switzerland, UK are your only source of capital. There are pots of capital around the world that are looking for clever, demand-led founders. Is that your way of turning me off? Okay, guys, I have run out of time. But I'm here all day, right? Oh, there's a market correction happening in AI. That's me. Sorry, guys, I spent too much time. But I will be around all day.
Reaching my head down, this was one of the best speeches that I ever experienced on Intap, and I'm really looking forward that I will run your panel, I believe, at noon. So thank you a lot, Christian.